Greetings. In the past, we've done some Ken's Corners regarding general information about various types of financial statements and what their purpose is. And I'd like to spend a little more time examining those things. But first, I want to talk about the accounting concept of cash versus accrual. And I think the reason why that's important is because some of you are fully aware of it, and I think that some of you are not so aware of what the difference is or the significance of the two and how each one of them serves a different purpose to help you analyze and manage your business and your cash flow. So let me start by first talking about what accrual means. An accrual financial statement is when you count the money in when it's invoiced. For example, if you sell somebody a set of widgets and you send them an invoice for those widgets, on an accrual system, you would count it as income when you send them the invoice. And the same is true with expenses. When you received a bill from your supplier who sold you those widgets, when you receive that bill and you enter that bill into your bookkeeping system on an accrual basis, that shows that as an expense. Now, and I know that seems obvious and that's easy to understand, but the reason the accrual system is important is it's used as a financial analysis tool because it shows you what it costs you to generate the income that you generate over the period of time that you are tracking those income and expenses. Here's how that is different than the cash basis. On a cash basis accounting, what it shows as revenue when you collect that cash or when you collect the payment for that invoice that you sent out. You sent out the invoice, the customer pays you. When you enter the payment itself, then that counts as revenue. And when you pay the bill to your vendor, that's when that shows an expense. Literally, the cash basis accounting system is cash in, cash out. Now, the reason why that's popular and useful is it helps you manage your cash flow and can be used for cash flow budgeting purposes. Now, most accounting systems, such as QuickBooks, would actually allow you to generate your financial statements both ways, both as on a cash basis and on an accrual basis. And so one provides you better financial analysis, the other provides you better cash flow management. And that's also important that if you're looking at someone else's financial statements, one of the important things to ask is whether they're cash or accrual, because you can, on a cash basis bookkeeping system, you can actually manipulate the profitability of the company, whether it's intentional or non-intentional, simply by whether bills have been paid or money have been collected. If you'd like to know more about these types of tracking systems and which might be best for your company or your organization for whatever purpose, I'd be more than happy to have that conversation with you. But until then, take care and be well.